You earned $5,000 last month. Your bank account says 3,620 showed up. Nobody stole from you. But almost $1,400 went somewhere, and most people could not name where. By the end of this video, you will be able to draw the whole thing from memory. Here is why this picture matters. The gap between what you earn and what you keep is the single biggest recurring number in your financial life. It is bigger than your rent for most people. And because it is sliced off before the money ever touches you, it feels invisible. Invisible is a problem because two of the slices in this picture are ones you control. Get those two right, and the picture changes every single month, quietly, for years. So let's draw it, one branch at a time. The first and biggest slice is federal income tax. For our person earning $60,000 a year, it is about $420 a month. Two things about this branch that most people get wrong. First, you do not pay tax on all $60,000. In 2026, the IRS lets a single filer subtract $16,100 off the top before any tax math starts. That is called the standard deduction. So the tax only ever sees about $44,000 of your income. Second, tax brackets do not work the way people think. Hearing, "I'm in the 22% bracket," makes it sound like the government takes 22 cents of every dollar. It does not. The brackets are steps. Your first $12,000 or so of taxable income is taxed at 10%. The next chunk at 12%. Only the dollars above each step pay that step's rate. Add it up for our person. The 10% step collects about $1,200. The 12% step collects about $3,800. And the 22% step, it never touches their money at all. Zero. That is about $5,000 of tax for the year on $60,000 of income. 5 out of 60. About 8%, not 22. And that $5,000 a year spread across 12 months, it is about $420 a month, the exact branch we drew at the start. One branch down, 5 to go. Next come two branches that always travel together. On your pay stub, they might be bundled under one strange word: FICA. Social Security takes 6.2% of your pay. On $5,000 a month, that is $310. Medicare takes 1.45%, about $72.50. What makes these different from the income tax branch? They are flat, and they start from $1. No standard deduction, no steps, no brackets. Every paycheck, same percentage, from your very first dollar of the year. One detail almost nobody knows. Social Security stops collecting once your yearly wages pass a cap. In 2026, that cap is $184,500. Below it, and that is most of us, the 6.2% applies to everything. Above it, the Social Security branch simply switches off for the rest of the year. Medicare never switches off. Branch 3 depends entirely on where you live. State income tax. 9 states charge nothing at all. Texas, Florida, Tennessee, and a few others. This branch just does not exist there. In most other states, it lands somewhere between 3 and 6%, and in a few high-tax states, it climbs toward double digits for high earners. For our diagram, we will draw it at roughly $200 a month, a middle-of-the-road state. If you live in Houston, mentally erase this branch. If you live in California, thicken it a little. Same picture, different width. Now, the branch that looks like all the others on your pay stub, but is the opposite of a loss. The retirement contribution. Our person puts 5% into their 401k. $250 a month leaves the paycheck. But look where this branch goes in the picture. It does not fly off the page like the tax branches. It curves back around. That money is still yours. It just moved rooms, from your checking account to your retirement account, where it buys investments and grows. And here's the quiet bonus, that $250 comes out before federal income tax is calculated. So contributing actually shrinks the big red branch from earlier at the same time. You save for the future and cut this month's tax bill with the same dollars. In 2026, you are allowed to send up to $24,500 a year down this green branch. If your employer matches any part of it, the branch gets free, money added that never appeared in your paycheck at all. Last branch, your share of health insurance premiums, about $125 a month for a typical single plan through work. Like the retirement money, this usually comes out pre-tax too. And now, step back. Look at the whole picture. $5,000 at the top, about $420 to federal income tax, $310 to Social Security, $72.50 to Medicare, $200 to your state, $250 to your own retirement account, $125 to health coverage, and $3,620 lands in the bank. That is the entire mystery. 6 branches. Nothing hidden, nothing stolen. And notice something. The single biggest branch after taxes is the green one, the one paying you. Here's what you can do with this picture. 2 branches in it are adjustable by you this week with a form. The green one, log into your retirement plan and nudge the percentage. Even 1% more barely dents the bottom bill because it shrinks your tax at the same time. And the federal branch, that is set by the W-4 form you filled out on your first day and probably never touched again. If you get a giant refund every April, your W-4 is oversending money all year. If you owe every April, it is undersending. 10 minutes with the IRS withholding estimator fixes either one. Next payday, pull up your pay stub and find all 6 branches. They will be wearing uglier names, but now you can read the picture. That is the paycheck, drawn in one picture. If seeing money this way works for your brain, subscribe.